Hello, geniuses. This is Christina Bruhan with Coin Genius. Today is Wednesday, June 24th, the day before our Q2 Collective Intelligence Summit. I am here, as always, with our head of market research, Mr. Steve Kwan, and I'm also joined today by Joff Paradise from Cryptomatic ATM and Dave Weisberger from CoinRoutes, our partner with Coin Genius. So things are absolutely crazy today. The market is bonkers. We're seeing so much news come out around mass adoption, and that is good timing for our summit that's titled The Road to Mass Adoption. So with that, I will go ahead and turn it over to Mr. Steve Kwan for our market analysis, and we'll have some conversation for you guys.
Christina, can you enable screen share?
I did not realize that we couldn't do that, but yes, thank you for the power of editing. All right, I'm hosting Jeremy's here. Steve, you really don't see the green share screen button in the middle there?
I do, but it says host disabled participant screen sharing.
Lordy. Okay.
Just make him a host. Make him a host and he'll share.
There we go. That's what I need to do. Thank you. Oops. Make co-host is what we want to do there. Okay, Steve, you are now co-host. I'm going to start the intro again, and we'll kick it over to you. Are you able to share your screen now? Let's do a test real quick before we record. Okay, great. Okay, take two. Hello, geniuses, and welcome back to Genius Wednesdays. I am Christina Bruhan with Coin Genius, joined here by the market research team and our head of market research, Mr. Stephen Kwan. I'm also joined today by Joff Paradise of Cryptomatic ATM and Dave Weisberger, our partner at CoinRoutes. Steve, would you like to give your market analysis for the week?
Yes, thank you, Christina. I'm Stephen Kwan, and let's take a look at what we have. All right, everyone can see Genius Wednesday, June 24th. So as normal, gonna start out with some macro things that I look at, and probably even more than crypto, believe it or not, but this is the Dow. So note high, low, high, low. Now just look at the curvature and angles. Now we have Bitcoin, where it didn't have the moves in the beginning of the week, but you can see over the past couple of days move down, and lo and behold, the Dow is down. So my theory continues, the same one that's been a couple years old. Oh, and gasoline. So let's take a look at gasoline and Bitcoin. Gasoline, Bitcoin. And one of the data scientists, Kinjal, was kind enough to put the numbers behind some of my theories. And I'm not mistaken, there has been an 82% correlation over the past year between gasoline and Bitcoin. I know you can't drive your car on Bitcoin, and, well, you get the point. Next, gold, little different story. Increasing.
A little bit about that story that you see. I mean, I see charts, right? I know that you are able to infer vast amounts of data from these charts. Can you tell a little bit about the story here? Sure.
Well, I've been talking to or helping Coin Genius for over a year now, and coming from an options and derivatives fund management background, S&Ps have, I guess, jokingly been, that's the economy the Fed looks at. So that's the economy Wall Street looks at. S&P down, NASDAQ, that's the economy. I know it isn't in real life, but that's the metric that we used for 18 years. And right or wrong, you'll see the correlation. So obviously well off the lows from March in all assets that I'm showing, but up around these kind of major resistance levels. Note this level, in Dow, notes, a little under 10,000 in Bitcoin. I would say amongst the people I talk to, there's a little bit of, wariness and being all in long. So someone that might have gotten long the Dow, 8,000 points ago, they don't mind selling, the first day down just to make sure they don't get horse collared, so to speak. And you can see this illustrated by the sharp sell-off this morning in Bitcoin right here, and the overlaying the sharp sell-off in the Dow, same time period. And just for good measure to show the correlation, an even sharper sell-off in gasoline or RB futures. So that's something that CoinGenius has worked on, where I've had many theories and some using Excel spreadsheets to help quantify my data. But I guess in today's world, having a team of highly intelligent data scientists that can put out an 82-page report on every commodity that I could imagine and its correlation with Bitcoin, equities, industrial numbers. So there's a ton of data, and I'm sure that we're willing to share these reports at a date soon to be announced.
Very soon, as a matter of fact, we're going to be releasing unveiling CoinGenius.pro version 2.5. So as of today, Wednesday, the 24th, it's still 2.1. Tomorrow at the conference, you guys are going to see the new release of 2.5. We're very excited to show our analytics platform.
All right, and I guess I'll mention again, there is a CoinGenius Summit tomorrow. Christina knows all the details. She is one of the leaders in the organization. But let me whip through the rest of the market items real quick. Moving on to gold. Didn't have as sharp a rally. It was pretty flat in the beginning of the week. So why it's up? I'm not a believer in safe havens. I mean, these are futures just like anything else, a 2-letter code at the CME. So again, you see equity starts to go way down. Look for this to come way down. Or the first day, it's what I call cute trades. Lastly, here is the 10-year bond. Rather uneventful, but right along the highs for the week. No surprise as equities make a low. Well, I'm starting a new segment, Christina, on cryptocurrency or blockchain. So we're going to give a shout out to what I'll call the outperforming tokens. First, I put together a piece on these guys, and I guess it's hard to deny their success, at least market-wise. And this is Chainlink, and this is priced in Bitcoin since many look at the Bitcoin Chainlink spread. And since Bitcoin has outperformed nearly everything for the past year, the fact that Chainlink is outperforming Bitcoin makes it even more astonishing. Next, the silver, I guess, to Bitcoin's gold, although they're very unsimilar except for the fact that they're both on blockchains. A few months ago, I noted that JM Bullion, a large bullion dealer, started accepting Ethereum as a payment method or trading method to get gold, silver, and platinum. And at that point, I deemed that Ethereum was as good as gold, and that was way down here. And again, this is not super exciting chart, but again, one of the others that's outperforming Bitcoin. This is BATS, smaller dollar interval, so it doesn't look so crazy, but the Brave browser. Don't know a ton about their team, but outperforming Bitcoin, and you're hard pressed to find many. Now this I found is a new issue this week, and I'm not familiar with it, but I thought it was definitely noteworthy. It's up almost 200%. It's the organization is called Compound, symbol is COMP. if anyone has any light to shed on that, that's great. I commend them for their price performance. I don't know much about the token or business model, but hey, it looks good on the chart. And finally, almost done. Second notable performer that broke into the top 50 was AAVE. You can see that almost doubled. Ticker is LEND. I'm gonna guess what they do. Don't have a position, have never had a position in it, but the chart is undeniable in a market where Bitcoin seems to trump everything. Last but definitely not least, I actually had the pleasure of meeting these guys in Las Vegas, so I got to give them a shout out. I know Masternode was something that people probably remember a few years ago, but I would give a shout out to the Divi project, which moved into the top 75 most valuable blockchain projects over the past month with a performance that's, I guess, simply impressive. So a shout out to Jeff and Nick of Divi and the rest of their team. And I guess leading into what Christina said, there were a couple rumors and or events that were announced. Rumor, but it's fairly circulated, so I have more belief in it, that PayPal and Venmo are to offer Bitcoin as a payment and payout method. I guess it's only natural, as Coinbase used to allow PayPal as a pay-in method and payout. And LibertyX announced a partnership with CVS, Rite Aid, and 7-Eleven to sell Bitcoin. The estimated number of new venues is going to be about 20,000. So along the lines of what Christina said, I think that makes it available or more readily available to a lot of people. And I think that my opinion is when someone tells me to do something, I may or may not, but I'm less apt to do that if I don't know the person. Whereas if someone gives me an option, like using PayPal 20 years ago, it was just for eBay. Now you can use PayPal pretty much anywhere. So I think this option to be able to purchase in, neighborhood stores is a great opportunity for, the, I guess, marketing of Bitcoin specifically and, blockchain projects as a whole. So that would be it for me. And I'll pass back to Christina.
Awesome. Thank you, Steve. I will say this is very exciting times that we live in, and I definitely am seeing the road to mass adoption happen before my eyes. It is so exciting. I'd also like to give a shout out to Divi. They're partnered with CoinGenius. We're big fans of what they do, and they will be at the conference. Nick Saponaro is actually going to be teaching a class on masternodes on day 2, so get your VIP tickets to be able to participate in that. I'm also going to give a shout out to Ave. I just spoke with Sonny last night on Draper Goren Holmes' Tuesday meetup blockchain reviews. So Ave is lending. So that is a really interesting side of this blockchain side of things. So with Salt and oh gosh, I'm going to forget her name. Celsius and Ave were with us last night, and I think that's why you're kind of seeing that performance there, is that lending aspect of it. You're getting better rates lending through these companies than you are through traditional banks. That's just a little side note of what I know of the few coins. I'm unfamiliar with comp. I will ask the team to look into that. So with that, I'd also like to welcome Josh Lawler, who just arrived, and I see Justin O'Connell on the line as well. You're welcome to join in. With that, I'd love to turn it over to JP. I really am excited to hear your feedback on, more crypto ATMs out in the world and what that means for mass adoption.
Oh, thanks. I appreciate it, Christina. First, let me, Stephen, you had some really good points. Comp and DB and yield trading or yield farming right now is huge on the market. I think it's new to a lot of us traders, but it's something that needs, if you're not into it, you should investigate it before you do anything, of course. But I think yield farming is the next big thing that's coming up. We've heard of binary trading and all this other stuff that's going on. And then I wanted to say that 2 years ago, I saw this coming with 7-Eleven because I was actually in a 7-Eleven in the Philippines, and they accepted Bitcoin there. And now I don't know if you know, but 7-Eleven is really huge in Asia, Thailand and Vietnam and Philippines. And they actually, I went to the 7-Eleven, I could buy a bottle of water with Bitcoin. And across the street was Burger King, McDonald's, and Subway, and they all had Bitcoin signs in their stores. So this is, I've seen this coming for a while now. History leaves clues, so you just have to keep looking at the clues and reading and seeing what else is going on around the world. As far as the cryptocurrency ATM business, I think we're about to get very, very large. If you look right now, there's a little bit more than 8,000 ATMs around the world, which isn't very many. That seems like a lot maybe to some people, but I've seen just in Ecuador, they have 3,000 regular ATM machines. So, if you think about it, that's not a lot of ATMs, but the majority of those ATMs are only one way, which means you can only buy either 1 or 2 cryptos, maximum up to like 6 cryptocurrencies that are offered at those machines. I really see what's coming is going to be the 2-way. And actually what we have a 3-way machine that we produce, or Cryptomatic produces, which is a card. And then they also do a cashless, so you can enter debit card, PIN, or credit card and buy crypto that way, and it's cashless. So there's different offers, and they have one machine, of course, that will do it all. You can do cash in, cash out, card out, or cashless. You can buy with card in. So, I see that 2-way machines are going to be, I think, very popular, especially doing multiple currencies up to top 10, I would think. I assume that's going to be happening. We just announced our POS system, or the POS system for our Cryptomatic. It's amazing the technology that goes behind this, that you can actually use credit card, debit card, and accept. And the cool thing is, you're a merchant. You don't need a license to trade cryptocurrency. With some of the ATM machines in some of the different countries, of course, you're going to need a transmitter license or a money exchange license, and especially in the United States. But when you're going outside, or you're going to a cashless machine where you're just trading for goods, then it's a whole nother story. So when you go to eat dinner, you swipe your card, or you can scan your QR and pay for your dinner with crypto, or other merchants, clothing, whatever comes into play there. So we're not just Cryptomatic's not just doing the ATMs; they're going full circle and creating not only an in-loop system with the card, but then also with the POS system for merchants. So covering all the bases, I think, is what it's about. And then, one of the big things is the sharing program. I've never in my life heard of an ATM bank or a company sharing in the transaction fees that are done. They do a rewards program, but not actually sharing the profits on the transactional fees. And so Cryptomatic has started a sharing program for people that want to share. Like if you want to have one ATM, but what if you could share in a network of 10 or 20 or 30 ATM machines? So that's pretty cool too, that they've come up with a clever idea of doing that. And I love the transparency that they provide. You get your own back office, it's 100% transparent. I love blockchain because of that, the transparency with blockchain, and CoinGenius using that transparency is what it's all about. Creating a trustworthy network where we don't have to worry about fraud or miscommunication or, someone misrepresenting, because once it's on the blockchain, that's there. As we all know, we're very strong advocates on blockchain technology. And that is, I believe, our next internet, or big as our next internet. Life-changing is what we're seeing today. I've been in this for a little while. As you probably know, I've been into the crypto space, heavily immersed in 2014. I actually got in the latter of 2010. I was very fortunate to get in, and had a really bad accident. And then in 2014, after recovering from my accident, I started getting really heavily into the crypto space. And I love trading. I love the arbitrage that our ATMs can do through the trading system. So we have some really cool stuff, but I'm really watching the market right now. something I wanted to ask you guys for trading wise, and I don't know if you're aware of this or ever even looked at it. If you look into Bitcoin.com, there's some charts there. And there's this one chart that I found very, very interesting. And I don't know if CoinGenius has that chart or not. I haven't seen it. But if you look at the 1 year plus HODL wave, and if you look at this thing, I mean, I was staring at it the other day, and I'm like, there's some, it goes all the way back to the beginning when Bitcoin was around 6 cents. It goes all the way back to 6 cents. And then it takes you all the way forward, and you look at this holder who's hodling, who's the holders of Bitcoin, and basically it's 1 year or more. So if you've held Bitcoin for 1 year or more in a wallet and never moved it, you make this scale, you make this wave. And we're at 61%. People are holding 61% in their wallets right now. And the last time we were at 61%, Bitcoin went up to 20 grand. So I'm not predicting that we're going to see a big, bull run right now, because I am a little bearish at the moment with all the indicators and all the charting that I'm looking at. I am a little bearish at the moment. I do believe we're going to see a pullback before we see a blast off. But, all I can say is if I were to say anything to my friends or family, I would say, buy. But, I love to see the alts that are performing well. Ethereum, I got to say, ETH is not second on Coinbase for nothing. I mean, if you look at that, they're ranked second. They're not, that's might want to tell you a little bit of something. But we'll see. We just got to hold on and see what's next. I think we're at a crucial crossroad coming up, and we're going to see some amazing stuff. I hope by Friday, tomorrow and Friday, with the launch of the CoinGenius on the road to mass adoption. I hopefully we see a breakout and something really good happens. But let's see.
Thanks, JP. We are crossing our fingers for the same thing. Jeremy and I were talking about that last night, about how cool would it be for us to be on camera doing live reports about the market during the event. I will concur, and Jeremy would say the same thing to our audience. Please expect a pullback. The whale, especially before a big blast off, drive down the price, buy the, understand the market behavior, understand what is expected behavior. So don't get too worried if you see it go down. That's actually the precursor to it going up. From here, I'd like to pivot over to Mr. Dave Weisberger from CoinRoutes. And JP, thank you for giving your feedback on the trading side. I know that you have kind of an army of traders as well that are watching the market. So we're really excited to get your feedback each week.
Thanks
Mr.
so much,
Dave. Sorry, thanks, JP.
Thank you.
Dave, would you like to give your analysis of the last week or so and what you expect to see in the next coming weeks?
Yeah, it's interesting because my gut tells me, and what I understand in my head is, on the technical side, I mean, I agree with JP. It certainly looks like that. On the past behavior side, it certainly looks like there is a desire to, quote, drive the market down, although one wonders if the 300 points from yesterday was, in point of fact, that exact thing. We've seen several moves, whether it's from 94 down to 9,000, or last night's 97 down to 92 or whatever it was at the bottom this morning. We've seen these sorts of hammer down moves. But the thing that's really interesting is, at the end of the day, Bitcoin, and I've said this many times, and I'm hoping you can hear me because you look frozen on your screen, but I can see Stephen moving around. Stephen, give me a thumbs up if you can hear me. Okay, good.
Okay.
So that's working. We've seen this before. I'm oft reminded of a comment that a famous trader once said, is that the market loves to humble people. And it really is interesting. We've seen these sorts of down hammers, but the thing that we all have to be very cognizant of is the macro news is ridiculously bullish. And if you think about the way Bitcoin actually trades, yes, there's certainly whale pools out manipulating the price to their own extent. I mean, there's no difference between this and bull and bear syndicates or passive investors. There's lots of things in lots of markets. When I use the word manipulated, it's little m manipulated, not in the sense of the market is rigged, but in the sense of there are people who prefer to try to buy at cheaper prices, and they tried to do it, and they've been successful many times in the past. The real issue, however, is that Bitcoin in its core trades like an option. It's an option on its own potential to be adopted. So your conference, which is talking about the potential for mass adoption, and I happen to be a believer, and I agree with a lot of the preamble about potential mass adoption. I think a lot of what JP is working on is setting the undercarriage, the infrastructure, the scaffolding for mass adoption. That's really the issue. So if you think about the notion of Bitcoin trading as an option on its own mass adoption, you end up with this very interesting disproportionate payout. On the one side, if it fails to achieve mass adoption, it could potentially go to zero. Do I think it will go to zero? No. But if it's a complete failure or something else takes over, that's what will happen. On the other hand, if it becomes a critical mass of adoption, you can assume that it will be at least the market cap of gold. Well, the market cap of gold, as we all know, implies 40 to 50 times this price level. So when you have that sort of disproportionate risk-reward payout, it's going to trade in a very interesting way. You're going to see significant volatility. What is most interesting about Bitcoin over the last week, and actually going back several weeks, has been the absolute lack of volatility. The fact that Bitcoin is trading in a way that's almost with the same volatility as the S&P or the Russell is really, really interesting. And the more that this happens, so on a day when the Russell or the S&P is down 3% and Bitcoin is down 3%, it's essentially a yawn. Structurally, Bitcoin should be substantially more volatile. Now, when you talk about correlations, and Stephen was talking about correlations, I would love to know what the beta of Bitcoin to other speculative assets has been, and what's changed over the last 3 months to longer or shorter, because we all know betas are notoriously unstable. I mean, in the old days, people would say, hey, if I want to get exposed to the market, let's buy high beta stocks, because if the market goes up, it will go up more. Well, at the end of the day, Bitcoin's beta has undeniably collapsed relative to risk assets. And that is probably really interesting. Now, what does that mean? Well, it could mean that at some point, the technical analysis that we're all used to will fail, and fail miserably. And maybe, in other words, this beta is much lower than one would expect. Maybe the collapse, the price knocking down has a floor, because it doesn't take much. I'm not saying it's happening, and I doubt it is, but let's say one branch of Paul Tudor Jones's hedge fund umbrella decides, you know what, if I can accumulate Bitcoin in the low 9,000s, I'm going to do that. That is enough to absorb the entire whale population of Bitcoin. Easy, 10 times over. I'm not saying it's going to happen. I'm not saying it is happening. I'm saying it would explain the low beta, however. And so do I think, I have absolutely no idea. And please, dear God, anyone watching this, do not take this as investment advice, because I am not giving advice. I am merely telling you the way I look at this is when I see something interesting, I always, it's whatever makes you think. And there's an old saying. When I was at 2 Sigma, they would have platitudes that would go up on various boards from interesting scientific geeks. And one of my absolute favorites is, the most important expression in science isn't "Eureka, I found it." It's, that's strange. And that's what I'm trying to say here. What we are seeing, yes, 83% correlations to risk assets, that isn't that surprising in this sort of global macro environment. What is massively surprising, and the reason it's not surprising, is because what you're seeing is the correlation to money printing going on worldwide, and all that money flying into risk assets or flying out when people start to panic. That doesn't surprise me. What surprises me massively is the beta of Bitcoin, and how it's gone from massively higher beta to massively lower beta over the last, and I haven't done the analysis, the data. I would love to see Stephen next week or in a couple of weeks, you guys to analyze that, because I think it would be fascinating. But that to me is that's strange over the last week. Every time I see Bitcoin range bound and clearly moving with risk assets, it fascinates me that the beta has been so low, that we haven't seen the kind of magnitude movements that we've been accustomed to over the last N number of years. Anyway, I blew it on enough, but that to me is the major observation that I've noticed.
Christina, can I add something?
Please, Steve.
Now, I would need Kinjal to back my comments now, but I guess what I would loosely note is that since December of 2017, when the first minute of trading on the futures was the all-time high. It was 20,365. 2 weeks later, it was 10,000. Where I guess to me, I was a precious metals guy, commodities guy, where I'd love to say that it's based on fundamentals, but when I see crude oil trading negative, which I never, ever, ever thought would happen, but it was because of a delivery guy and somebody didn't pay attention to the risk reports, but that's a different story. I just feel that it's Bitcoin specifically is just getting more productized where there's futures. I think Jeremy can back me up on, there's some exchanges that do 100 times leverage. If I'm not mistaken, I think the S&P futures are about 21 times leverage. Gold is around 12. ETFs are maximum 3, which I've seen Binance do a 3 times levered, Bitcoin long or short. Or Josh probably knows this better than I, but I don't think it's legal for an ETF to be 4 times because it's considered, I guess, a future at that point. And it just, the more people that are in on these highly leveraged things, I just feel you get compressed where someone making $100 on $100 move is, I don't know. I'm not that, I can't tell you Bitcoin's gonna be up or down $10 or $20, but I'm usually pretty good at picking the major areas, like in March when everything hit a low. And I just think that the lower volatility, David, it's a positive where, if you work for 2 Sigma, I'm guessing that things that have a 200, 300% volatility it's not appealing to a ton of people where, you see somebody's P&L chart and it's like a heartbeat monitor. That's not what, investors I have or talk to want to deal with. It's like somebody says I'm up 300% in the past 2 years. They're almost just like, no thanks. It's like, why? Why? It's just, well, you had to risk something to do that. There's no risk to make 300%.
There's certainly the Sortino and Sharpe ratios are going to suffer in
I mean, just to chime in a little bit, and Stephen, you mentioned precious metals. I think there's a very dangerous scenario that's very similar, which is that there's more paper out there than there is precious metal, and when you start writing your derivatives and your futures and such, you're expanding the supply of an asset that's value is based on supply and demand, and that's something that obviously there's a lot of potential growth in the market cap for Bitcoin, and it would take a lot of futures. But if you look at silver as a decent example of something similar that has a much lower market cap than gold, obviously, it's a lot harder to get physical silver than it is to get paper silver. But the price of silver that you're going to see quoted is the price of the paper silver. And I'd be concerned with Bitcoin. I personally think that if the use case of being a medium of exchange, very nice, and I have some of those myself, but if the medium of being a use case, use case of being a medium for exchange doesn't fly, I don't see how Bitcoin ultimately flies, because everything is a store of value when you get right down to it. And that's not unique. At that point, you're just looking at a first mover advantage for you to be able to say there were a mover. Anyways, food for thought.
I look, that is why I always express it as an option. At the end of the day, the question really is, on both ends, the people who are uber bulls are like assuming and say, well, of course it's the granddaddy, it's the only one, it's mathematically brilliant, and I'm very sympathetic to a lot of those arguments. And the fact is, we went through a halving to where now Bitcoin is at a lower inflation rate, or the same inflation rate as gold, meaning the amount of gold gets pulled out of the ground every year. And there were all sorts of articles, oh my God, the network's going to collapse, miners aren't going to be able to deal with it, look what happened. And we had the greatest mining adjustment in degree of difficulty ever post-halving, was it last week or the week before. So quite obviously the network is still marching on. Now, do I think that Satoshi Nakamoto, and this is topical, is Harry Seldon in terms of predicting the future? And people who don't get that, please don't admit that, because you lose all your geek cred, since Apple's about to put Foundation out as a series, which I'm prepared to be disappointed by, because it was one of my favorite books of all time. But the fact is I don't know if that's the case. What I do know is that there is a monster need in the world, less the US for now, unless the dollar gets repudiated, but there are many, many countries where people literally can't depend on their currencies. The government manipulates it. It is there. We've seen it, whether it's, Turkey, where the lira has double-digit inflation and has had for constant years, to Zimbabwe. Obviously, we all know what's happened there. Ecuador, Argentina, Brazil, there's issues in all those currencies. One might think that Bitcoin does have a place for people around the world. The other point that just drives me freaking crazy when I hear people of my age, and by the way, it's the boomers that generally say this, they say it has no value because it's not backed by anything, it's not tangible. That is wrong on so many levels, it's almost hard to start, but I'll mention two, one historical and one current. We'll start with current. I was a D&D player, Dungeons and Dragons player in college. As a result, I don't have the time to play World of Warcraft. I don't have the time to play any of these games with any length of time. But to know the amount of real money that gets spent on digital things to facilitate games, to believe that you can't say that something that's digital has value is just literally ignoring everything that the people these days under 30 are looking at. It's completely natural for 45% of the world's population to look at things that are digital and say, oh, of course it could have value. That's the first thing. The second is seashells were money and used for money for 2,000 years with zero inherent value other than the fact that they look pretty to somebody, and they were supposedly scarce. Now, I happen to be sitting on Long Beach Island, New Jersey, where if I want a seashell, not during the summer because it's too whatever, but during the winter, you walk on the beach, you find seashells. It's there, right? It's something, but that was 2,000 years. Gold is money, was money, not because of its beauty, because yeah, people use it for jewelry, or silver was the same. It's because it was scarce and it was hard to counterfeit. And guess what? Bitcoin has all that in terms of scarcity and hard to counterfeit. Now, will it be accepted? I don't know. I've said that. If I thought for sure it was going to be accepted, I would have mortgaged everything, and that would be the only thing I would own. Because at a 400 to 500 times being paid for on a binary decision, that's where I would be. But when one wants to trade, one needs to look at it that way. So I kind of look at this on a long-term basis as it's pretty obvious what's happening. But on the short term, markets can do things that are crazy, and they've done it many times before. And so that's the way I look at it. But everything you said, I agree with. I mean, it is clearly no slam dunk, because if it was a slam dunk, I mean, you'd have 2 zeros on the end of the price already.
Josh Lawler, I got something from the CME that I get every day, but I want to share this, I guess, with everyone, but specifically because you mentioned it, and it's right here. Okay, so this is the gold stocks for the CME or COMEX, what have you. And, you can see deliveries and blah, 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 and it's more of a delivery game. Like, I've actually taken delivery for a long, long, long time ago, but I'd like to focus on this note right here. I'll read it out loud. 400-ounce and eligible brands include 400-ounce bars as well as kilo and 100-ounce bar brands, only eligible for the delivery for gold enhanced delivery. Contract kilo and 100-ounce bars eligible for both. So when something is eligible for both, that would mean, well, you can infer what it means. Then
No,
last
Steve, explain it to me. I have no idea what you're talking about, and other folks on the audience aren't going to know either.
This is in regards to what Josh was saying about how there's more paper silver than there actually is physical. Like, I'm fully aware of that. It's just like if someone wants to buy the whole wheat crop, you in theory could do it in the futures market, but it wouldn't be possible to take delivery of all that. Now,
delivery argument. Okay, got it.
Crude, gold. I mean, gold is a lot easier. Like platinum stocks, I've seen get down under 5,000 ounces, and it was $600. So you're talking about an amount that, you know, many people could do, but the CME and COMEX won't let that happen. Like during the Hunt Brothers, they went to a close-only trade, so everyone's long, or majority. Guess what they have to do? They can either hold or sell. One guy sells, then the avalanche starts. But it really is the same in Bitcoin. If you think about how many futures, swaps, levered products there are, you know, on many exchanges, there's far more. I would guess there's probably hundreds of millions of Bitcoins of exposure, but I couldn't give you an exact number. And finally, the last piece that it says, this information in this report is taken from sources believed to be reliable. However, the Commodity Exchange disclaims all liability whatsoever with regard to its accuracy. The report is produced for informational purposes only. So that would be the entity that owns this, is telling you that it's for informational purposes only. So again, take it for what it's worth, but I would agree that there's far more people want. I think people want exposure to gold and silver and Bitcoin far more than they want.
Which is why the use case has to drive it. The medium of exchange use case has to drive it. Otherwise, it can just be derivatived into nothing should somebody want to do that. By the way, that last piece, that's just somebody being a lawyer. I mean, most of the time when I'm talking with my wife, I tell her that it's for informational purposes only and that I'm not committing to anything. So yeah, that is what it is. But thank you.
Does that work? Entity saying that, Josh. I mean, if you were the entity of holding all my gold and you're like, it's for information, it's
no. Trust me, if there's any chance of that being incorrect, and there obviously is, that's just kind of our typical CYA part of it. It actually takes me quite a long time to talk with my wife in a given time. The fine print in those discussions is just ridiculous.
Understood. I thought you would appreciate that, though. I don't know if you've ever looked. Google CME gold and silver warehouse stocks, and you can pull that Excel sheet up once a day.
Yeah, it's actually, I tend to invest in the miners for metals because they have real metals that they mine.
Not fake metal.
Not fake metal.
Paper metals.
Not paper metal. It's interesting.
Paper money, paper metal.
Yeah. So, you know, one thing that I guess my current thought process right now is that, you know, it really, I'm the use case king in terms of trumping use cases. And I think we're starting to really see some separation in the tokens based on the ones that have legit use cases that can actually drive supply and demand adoption. And, you know, by way of example, since everybody knows I'm a fanboy for it anyways, what Chainlink is doing right now is based on the fact that Chainlink kind of rocks as a business. They've got, you know, a great defined business model. They pretty much own the space. And, you know, they're announcing actual deals and partnerships with actual companies that use actual Link. So that's I think the example of what should happen. It's the kind of shining knight through all the shit coins, if you will.
Josh, I have a question for you. It's actually, I wrote a piece on Chainlink about what I deemed the pluses, obviously the technology, the team, like second to none. I gave them 10 out of 10. The price, whoever's watching the market, 10 out of 10. My one issue with many tokens is that I think it's called Smart Contract Chainlink ESV or something. That's the actual entity. Those guys are rock stars. My question to people is, when I buy LINK and I hold it in my wallet or on Binance, I don't own part of the company.
No, you don't.
I mean, there's the belief, but again, markets are the belief that the company is doing well, so the token does well, and I totally get that. But I almost feel like some private equity firm could go to Chainlink and basically say, all right, we want to buy you guys for $3 billion. And it probably would be a great deal. Yep. And what would happen to the token? I don't know. It could go
Not a darn thing. And in fact, you just described Ripple. Ripple stock is privately available and has absolutely nothing to do with XRP. For that matter, Ripple's product also has absolutely nothing to do with XRP. That's a different discussion. But you're absolutely right. And this is kind of the crux of the great fight over Howie and whether it's a security or not. The argument that certain West Coast law firms were making in 2017 was that these tokens aren't financial products. They're not a piece of ownership of anything. They aren't debt. They don't promise a return. And the only reason that there's value behind them is this supply and demand dynamic, which is really commodity-like. And a number of them actually should be treated as commodities. And the SEC said, well, not exactly. There's this thing called an investment contract. It's the great catch-all. And the fact of the matter is that if your company goes off the face of the earth and stops, expanding the demand for these tokens, then the tokens are going to go to hell. Therefore, you're aligned. You satisfy these elements under the Howey test, and it's an investment contract, even though technically it's not even a contract unless there's a SAFT involved. But that's their logic to it. I don't really love that logic, but that in terms of policing issuances, I guess isn't a horrible thing.
So one last question for Josh. If I were to say that many tokens such as Link and XRP, a la smart contract, Chainlink, and Ripple Labs.
Mm-hmm.
The other part that I think makes these guys brilliant is that they realize just what you said, where I don't know if a lot of people have really thought about that, where like Bitcoin, if there's no 1-800-HELP-ME number, then it's a cryptocurrency. If there's a team and a face and that it's a organization that uses block, could cryptocurrency or blockchain be just the third funding mechanism? You have equity, debt, and
yes,
blockchain.
yes. And in fact, it's one of the things that drives me nuts about our country is that we're throwing the baby out with the bathwater in terms of how we regulate these things. To give you an example of how this can work, we had a client, it's now 2 years ago, that we were doing a transaction where they had a token that powered property management software, but the funds that they were getting from that token sale were being used to build low-income housing that was going to be managed by the property management. So they're basically, creating their own customers through this. The nice thing about it was that low-income housing did not pencil out via traditional financing. In terms of if you had to do it with a regular capital stack, the amount that you could get in rent was not going to support over time the equity and construction loan and refi into a long-term loan. But if you throw in the token aspect of it, where that's not part of the building's capital stack, you're funding something for the public good. So there are a lot of really creative mechanisms. The problem that we had is just really a lot of people failed to disclose things that should have been disclosed. In my mind, it's really more of a consumer product thing than it is a security law thing, but a voice in the wind on that. But that's, you're right. It's another fundraising mechanism, pure and simple.
The reality is that the core problem here is the fact that the U.S. has arguably you could pick your adjective. I'll just say ridiculous for now. Notion of accredited investors for private offerings as opposed to public. There's literally no human being that I have seen that I have any respect for whatsoever who thinks it's rational that that you should have a wealth test for buying instruments that your knowledge is there, but a retail investor could buy options with absolutely nothing other than signing a disclosure saying, yes, I read the OCC's forms on options risk and disclosure. And you do that. That to me is
but you're kind of talking about the brass on the Titanic. It's the handrails.
No, I'm actually talking about the hull on the Titanic is the problem.
Well, the hull. Here's the thing. the SEC, I have sympathy here. They've got a mandate: preserve orderly markets, protect the Main Street investor. And the accredited investor test, which came into place in the 90s, I think, the Private Reform Act. Anyways, it hasn't changed since then, and it was somebody's pre-internet idea or beginning of internet idea that we need a way to allow private investment by people who can protect themselves, who we don't need to protect. And they came up with the accredited investor test, and then they didn't do anything with the guidelines for 30 some odd years, and now it's kind of ridiculous. But the fact that we're opening things up does open up the problem of there being some danger. And if you need an example of that, it's how many idiots in certain states. All right, Christina's telling me to move my butt. How many idiots in certain states mortgaged houses and put $20,000 Bitcoin on credit cards in 2017. The unfortunate fact is there's a reason for the paternalistic thing. It's very hard to draw what the procedure should be. My bigger problem that I rail against is that they just misclassify the asset, period, end of story. And that's a big problem. Anyways, that's all I have to say about that.
Longer conversation.
Much longer conversation. And I'm so sorry, you guys, we're at the top of the hour and I need the Zoom for Mr. Don Tapscott. So we're going to have to wrap up here. Thank you guys so much for joining Genius Wednesdays. I sincerely appreciate it. The conversation will continue tomorrow and Friday at the conference. Everyone here on the call will be speaking on a panel. Some of you guys are doing labs on day 2. So folks, get your VIP tickets and come see all of these folks, and you can mix and mingle with them at the VIP networking parties. So until next week, this is Genius Wednesdays. Thank you, everybody.
All right, thanks.
Thank
Take
you.
care, guys.
Good afternoon.
Thank you.
Take care.
Bye-bye.
Bye-bye.